Hello, Namaste, welcome back to my channel 𝗦𝗛𝗕 Stock Analyst. This is Neeraj here. So, whether the fallout of Silicon Valley Bank financial group, is it a failure on the system, financial system and overall US market, or is it bank responsible or US Fed policy responsible for this failure? Let's discuss this in this video. So let us understand a little background about this Silicon Valley Bank financial group. It is the largest, 16th largest bank in USA, and you will be surprised to know that it got the best bank award just in January 2023 this year by Forbes magazine. So you can understand the quality and the credibility of such magazine as well as the receiver of this award. So anyway, SVB Group became the largest bank to fail since 2008 financial crisis as California regulator took it over, closed the bank and assets taken over by Federal Deposit Insurance Corporation FDIC. So bank has $209 billion worth of assets as on the 31st December 2022. And you can say that it is a kind of a run on the bank because depositors tried to withdraw money at the same time and bank didn't have enough cash to satisfy this withdrawal of the money. So, and they tried to sell that whatever the investment in treasury bonds, and in that also they lost around $1.8 billion. And they tried to raise the capital to satisfy the depositors. But with this kind of scenario, there was no investor who was ready to put money into the bank. So bank is basically the leading financier and the banker for the technology startups and venture capital funds in the Silicon Valley. And many of these companies, most of these companies have kept hundreds of millions of dollars in this bank as the deposit. Okay, so whose fault is this? Is it the bank's fault or is it US Fed policy or regulator? So let us see into that. Since many of these venture capital and tech startups kept their money as depositors, but in last few months, as you say, that many technology layoffs happened because the funding dried up because of the continued increase in interest rate hikes by US Fed, and because of that this VCs and technology companies, this slowdown happening. So because of that they tried to withdraw the money because they have to have the day-to-day expenses and run the operation, right? So now because they were not getting funding from the other investors, they tried to withdraw this deposit, and that is where the run on the banks happened, and bank tried to raise more deposit or the more capital, but they failed into that. So my understanding is that it was a basically mismatch of the bank asset liability. So how it happened, it is a responsibility of the bank's risk management department. So they had now I will tell you that how mismanaged. So they had whatever the asset they had, right? So the liability is the depositor's money is the liability to the bank, and whatever the investment bank does in bonds or anywhere else, it's called the asset. So the liabilities were short term because it can be withdrawn anytime, it's called current liabilities, but the assets were long term. So they put money into the long term. So that is a mismatch. So when you try to run your money or try to earn interest on the current account deposit and put investment into the long term, definitely this is bound to happen, and this is what happened. So let me explain with the real figures. So if you look at the balance sheet, which I gone through the balance sheet of this bank as on 31st December 2022, you will find that there were deposit of $173 billion, which is a liability for the bank, and equity of $16 billion, and bank had an asset or the long-term investment of $120 billion. Most of this $120 billion were invested as long-term 10-year treasury bonds, and because of that what is the relation between the bond prices and the interest rates. As the interest rate goes up, the bond prices comes down. So that is how it is. So since these were the long-term bond, so it was kind of held to maturity category. But since bank got so much of this withdrawal request, deposits were taking money, so banks had no other option but to sell some of this held to maturity bonds into the market. And since higher interest rates going up, the bond prices goes down. So they had to sell at a very loss or discounted prices they got. So on an average, you can say that even if the bank would have sold all their $120 billion, they would have incurred minimum of $10 to $15 billion of losses. That would have entirely wiped out the capital of the bank. And even after selling that and with the bank's capital, they would not be able to return all the money of $173 billion to the depositors. So that would be a minimum shortfall of $47 billion. So that is where the US Fed or the bank's risk management fault. But equal responsibility or the equal fault blame goes on the US Fed or the US banking regulator, because bank's regulator job is to look into each bank's deposit loan ratio and then advise them or give them a warning that you have to reduce deposit or you have to increase deposit and reduce loan. So that ratio, so that capital ratio, that it is the job of the regulator also, as well as apart from the bank's own risk management. And also, is it the US Fed's to be blamed? In a way, yes, because US Fed kept on increasing the interest rates and to fight the inflation. But with the increasing interest rates, you will see more and more corporations and more financial institutions and banks will come under water. You will see that contagion will, like financial crisis happened in 2008, like that way, that can some kind of a ripple effect can happen. So if they stop increasing interest rates, then the inflation will continue to remain high. So it's a dilemma, or what you call, but the blame is that US Fed couldn't anticipate the long-term nature of this inflation, long-term nature of this high energy prices because of their own sanctions policy and choking up the supply and restricting trade. So this is where US government and US Fed also to be blamed for that. So in nutshell, even I heard that Janet Yellen told that we will try to stitch up something for this so that depositors get that money, but there won't be any bailout. So when today in the evening when the market and the bank open, we will see what they are able to do for the depositors, but which I doubt very much, that bank has no other option but to fall down. So if you have not yet subscribed to my channel, you please subscribe and put a like to this video. And also I have a Telegram channel newly opened, so where this short term and all this breaking news and other thing analysis, you can get investment ideas, stock ideas, trading ideas. So that description is there in the description box down below, and watch my visit my website also for getting to know about my services, @analyst.com. That's it from my side. Love you all. See you once again next week.